Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you as we check out markets which are rocketing to new highs just about everywhere around the world. It should be easy, shouldn't it, if that's the case, certainly for trend followers like us. We'll answer that question after we talk about the disclaimer, which says that everything we're going to discuss tonight is just information. It's general information. That has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness to you. Apart from that, always remember that trading, investing, it is risky. You could lose money. And if you do, it's as a result of the decisions you choose to make. It's not really as a result of anything that I'm doing, because you're in control of your financial situation. Apart from that, obviously, your job is to ask the questions tonight. You can ask anything, ask me to look at any chart of your liking from stocks, indices, bonds, crypto, commodities, or anything about trading. We do have a really good question about sort of the generals of trading coming up a little bit later on. There should be a chat window somewhere there on your Google Meet screen. Let us head over to the Amy Broker screen now, and we're going to kick off with a look at the global macro and our portfolio management model, which will come up on your screen in 1 second. There it is. That's the Nasdaq Composite in the USA. Last time we spoke, we were moving towards a 2/3 risk position. Nothing really tells me that we shouldn't be doing that now, or even moving towards a full risk position in Australia. Actually, let's go to the Russell. Not as good, is it? Interestingly, that's the heart of corporate America there. We would think it'd be looking better given the Nasdaq situation. A little bit disturbing, but not enough to push me off my original view. And then we're heading to Australia for our Aussie exposure, and that can be nothing but full risk position, given the situation here. I'm pretty sure we said that last week, that we would be moving towards an FRP for Aussie stocks. When was the last time the Australian market has made consecutive highs and the US market hasn't? I mean, literally, when has that happened? I can't recall a time. Aussie, oi, oi, oi. I think that's pretty straightforward, isn't it, for the portfolio management model? Let's have a whip around the grounds to see if there's anything to push us off that view. France, which we said was looking a bit sketchy last time, that's pushing back up, so that's encouraging. Not that it's going to make a big deal to us, but the DAX could, the European markets, want to see them doing well, and they are. And there you go, we're in line with the Germans. UK, very, very flat. Interesting, they've got plenty of resources stocks. They're not getting much of a run over there. That's a surprise given how much they've got up over here. The Spanish market is still looking the best. Heading over to Asia, well, we're going to see some incredible charts. And the word incredible means hard to believe, doesn't it? And it is hard to believe the turnaround here. And, trend following is ultimately, investing, trading, only looking in a review mirror. Charts are the past. They are historical demand, schedules of historical demand and supply. They cannot see the future. And what ultimately changes price, or makes the demand and supply elements change to therefore change price, is news. Markets are always assessing news and trying to understand its impact on future value, and implementing those assessments into price. So news can change trends without notice, and they can change them in a big way, and that is ultimately what has happened here. And if you don't know what the news is, you've probably been living under a rock for the last 5 trading days. It's about the big stimulus measures that have been announced in China, and they've announced them before. We've seen rallies before. I don't think we've seen rallies this substantial, and that's kind of the thing. Nothing makes prices go up better than prices going up. And, I always talk about V-shaped rallies are the best. I think this is a credible rally here. Okay. Frustrating for me. You can't understand my degree of frustration in seeing some really fantastic looking downtrends just reverse course very quickly. I mean, if you're using my model, big white candles should have got you out of any short positions fairly quickly, but frustratingly hard to get long on many of these because of the V-shapes. We're going to look at them. I love bases. I love bases before taking aggressive trades, but no bases on those, just V-shaped rallies. India, fine, no troubles there. That is, it's not impossible. Okay, so The only thing I'm not surprised at is my surprise. You have to expect the unexpected and have systems to manage for it. So, yes, it surprises me, the severity of that rally. But it also doesn't surprise me because these things are absolutely possible. But as a trend follower, they're going to mean you're going to miss a bunch of what everybody's going to say. Oh, wasn't that obvious? Wasn't that a great trade? Look at me, I bought BHP and Rio and Fortescue and I'm so clever. Clever or just plain dumb luck. It is irrelevant. It is irrelevant, right? Their model works better than my model right now. There you go. What more can I say about that tomfoolery? And the result is that on the ASX 200. And it's also this on the materials sector. We've gone 19.6, 15.4, 18.4, just in a heartbeat, and just huge white candles. Even today, you would say it's still a buy is the wrong word, but it's still the picture of excess demand in the short term. For me, I need to see a dink now. I'm waiting for pullbacks on these things. And the frustrating thing is they've gone up so much before we're going to get that pullback. There was a little signal here. It's very tiny, just a little rally above the short-term uptrend ribbon. We know how short-term trends change. Price action moved back to higher peaks and higher troughs. So I think this is really instructive. I'm not saying that you could have foreseen this, but price action still tells a story. Little pullback, test and hold of that short-term trend ribbon. Look how good that trend ribbon was. 1, 2, 3, really 4 times at providing dynamic supply. And when it doesn't provide dynamic supply, but starts to provide dynamic demand, that's really important. Not that I could have gone long there because it's not a base pattern. It's not an aggressive setup, and we were too close to the long-term downtrend ribbon, which should be dynamic supply also, of course, straight through it. That's the material sector, resources sector, similar. What has happened, and you would have noticed this, is that some of your great trends haven't done so well while resources stocks have been rallying, because in Australia there's only so much money to go around, and some of that money needs to therefore be removed from those other great trends. But hey, it's live and die by the sword. You got those great trends in the first place because resources were getting belted. How do you think the capital... what do you think the capital came for? To create all those great uptrends, particularly in banking and insurance stocks and some technology stocks as well, and some healthcare stocks. It was coming from resources. So it makes sense that if resources finally, we'll say the sun shines on the dog's posterior every now and then the sun was shining on resources. The money's got to come from somewhere. And if we look at what's happened here in the financial sector, we haven't seen black candles like this since the carry trade was unwinding. And that's the order of magnitude of shock and awe that this last rally has been. I want to say gold won't do as well, I guess, when everything else is doing as well. We'll just look down the list. Consumer discretionary is actually still fine. Energy's getting a bit of a Guernsey. And actually, look, there's that pattern again on the energy sector, that push above the short-term downtrend ribbon, the test and hold, a nice candle coming out of it today. That's super interesting for me. We've talked about financials. Healthcare is where the money's coming from, but that's been pretty sick, no pun intended, for a little while. Technology is still gangbusters. That's impressive for me. Talked about that. Property, bit of money, I think, coming out of property, heading towards resources. A lot of money coming out of staples because of what's going on there with the ACCC heading towards resources. A bit of money coming out of there. I put to you, that's neither here nor there. And that's the whip around Australia. Let's head over to the trading views screen now. And you can see I was in the process of making these. Watch this for you. I'll promise you I will get to the bottom of it and send you out a video during the week to show you how to get access to them. But for now, let me put these back to what we usually see. Let's go to bonds. It's going to go to commodities. I will go to commodities. Let's go back to here and go to silver. X marks the spot, isn't it? Look at that. Big supply zone up there that I marked out for you, 32,425 up to 30.55. And we often say here that a supply zone isn't a supply zone until we get there. We see what candles occur there and how the demand and supply dynamics change and whether supply does actually manifest itself. And it did manifest itself there. How does supply manifest itself? Let's jog your memory. Well, it is upper shadows and or black candles, and it's the and or that occurred here. So silver pushing back out of that zone doesn't mean the trend is dead, just means that there's supply there. So it needs to be dealt with. And, we can't always get through supply on the first go. It takes a building of demand and a diminishing of that supply before we can get through. So look, the short-term trend is still up, not terrible on that one. Gold is still intact, but it's frustrating when you've got gold stocks that at the slightest pullback in gold, you sell off much harder than we would like them to. That trend is fine. It's disappointing though. And then we've got copper, which again, X marks the spot that I gave you in ChartWatch on Market Index, my evening updates that I do for you each day, 4762 to 4768, and the big shadow popping in today. Look, short-term uptrend is still intact, but we're going to have a dig before we can tackle higher retracement levels. Iron ore, a big push today. Oh, okay, so had a look there at 114, 114.30. Coming back, that's probably no surprise given there should be plenty of latent supply in the system. Is this the start of the legendary seasonal rally that is typically starting to occur around about now? Probably is. It took the most incredible events in China and share prices to cause it to happen, but it is happening. We've had some good news on uranium. It hasn't had a huge impact on the price. Go check, again, Market Index. I did a comprehensive uranium sector review for you today. I covered, Kazatomprom, Cameco, a few other US ones, and the key Aussie ones as well. That's live on the website now. We have seen a little bit of a pop up in natural gas, just moving up the list to energy commodities. Now, crude oil, a little bit of a bounce off the lows there, but I would say that looks all that inspiring and probably then draws back to, well, why is the energy sector going up? It probably doesn't matter anymore, does it? What commodity prices are doing. Everybody's over the moon about this China stimulus. Thermal coal pushing back up, and we actually did get a pretty decent bounce in met coal there for you coal bugs, a few of those around. Let us quickly then finish off with a look at the bond market. We're going to go to the US 2s first of all. Nothing really changing since our last update, which is okay as well. If they didn't go anywhere, that's probably good for markets. Heading over to the Australian ones there, ditto. And let's check out the all-important Japanese bonds, which are heading back up actually, which is not ideal for us. We probably rather these steady to just trending down. I think steady is probably the best place for those to be. Okay, let's head back to the Amy Broker screen. We're going to do offline requests first. And I'm going to make sure I'm in the right window this week. And I have a couple here from Adrian, who wants to know about ARB first of all, which is a stairway to heaven, as he says in his note to me here. Definitely a continuation setup. Just keeps keeping on, and there's nothing really sinister in here that would suggest to me that we need to do anything but continue to hold it. Today's candle is not ideal. It's also not ideal given the broader market had a really good trading session today, but it's not enough to push me off a full risk position here. So we'll talk about some of the things you might want to keep an eye out for, but there's nothing sinister in there just yet. Okay, what do we want to keep an eye out for? Well, we talked about candles and supply side candles, so let's just reiterate those. We've always got new people coming in, so I know most of you know this. Oh, Carl, I've seen this before. Why are you doing it? Well, smarty pants. Not everybody knows this stuff all the time. And obviously, black candle. How does a black candle form? We have our open up here and our close down here, and it's pretty simple stuff, really, when you think about it. There's only one way you can get from that open to that close, and it is if there's excess supply in the system. And it's not about more buying it than selling, or selling than buying. It's silly. You can have 1,000 buyers and one seller, and the price can still go down. You can have 1,000 people bidding for one share, and one seller with 1 million shares, the price will go down. So it's just about this idea of supplies. It's not just I guess it's quantity and it's motivation, isn't it, of shares. Demand. What's demand? Demand is cash. It's as simple as that. And what is potential demand? Potential demand is all the cash in the world at any one point in time. I assure you, if an opportunity is good enough, every dollar on the planet will somehow find a way to get into it, especially in today's interconnected financial system. It's that important. It's so important you understand that demand is every dollar on the planet. So when you're looking at your crappy little mining stock that's been going sideways for the last 5 years, it's just not attracting any of that cash from all over the world. And that cash is constantly, trust me, it's not all about you mums and dads sitting there on your CommSec account punting your self-managed super fund. That demand is smart money, and it is always doing the research to figure out the best risk-adjusted return for that money. And this is an example of a stock that's not getting that demand, and in fact, it's seeing excess supply. Look, the other thing you might see is the upward pointing shadow, and that's just indicating that we had a high. Don't worry, I won't spend too long on this, I promise. That we did have a high there. At some stage, we'll get copy and paste that over, and then we say that was the high. And it's very important we look out for these upward pointing shadows as an indication of where supply is manifesting itself, because the only way you can really be up there is with excess demand. The only way you can get to that high was there was excess demand in the system. But then think about how important that shadow is in terms of telling us, well, why didn't we stay there? You know, you've got to think that, can I do this? I think I can do this at some stage. This was a white candle. So if we go fill colour white here, you can't see this. And we go, there you go. It was a white candle. And then it ended up being a black candle. So you've got to think that that close started falling and started falling and started falling and started falling. The only way you can get from that high to this low here is if the supply side really did a number on the demand side. And that's how you have to think about those upward pointing shadows. Like demand thought they were cooking, they were cranking, they were all over this, and then boom, the supply side absolutely knocked them sideways. So they are our supply side variants. I won't do the demand side. I think you can turn them around, but we can see just underneath that FRP, yes, we are seeing a bit of supply coming to the market. We did start today with a demand side candle. But where did we finish? We finished nowhere. We finished in between. The demand and supply were roughly equal. If we see these supply side candles coming in, that would cause me to manage my risk on this position. What would it look like in real life? Something like that. I wouldn't like to see something like that. Something that substantial would cause me to manage my risk, which is minus a third. We're not there yet. The other thing we might want to keep an eye on is if these candles build up over time to give us, for example, lower peaks and subsequently then lower troughs. Imagine these are candles here, and then we start to see lower peaks come in, and that is your peak there. So if we move this away and we say that that is a peak, and well, really, the correct term is point of demand, point of supply, I should say. The peak is something people are more likely to be familiar with. Think of peaks in the mountains and troughs or valleys in the mountains, but really, ultimately, they are points of supply, aren't they? And then there's a point of demand in between them, much like in between every two peaks in a mountain range, there is a trough or a valley, but we know them here as points of demand. So as the points of supply are falling, clearly the only way that can happen is if supply is building. We're seeing supply reinforcement. And then if we're now taking out the points of demand by closing beneath that point of demand, we are removing demand from the system, and that is not a good state of the demand-supply environment for prices to continue to go up. But for now, this is fine. That's the live market analysis 101. Let's keep moving to Adrian's next one, which is a frustrating chart for me, and that's New Hope. And many of you will tell me that you knew that this was a top quality company, and it had no business at all being down here. And I think it started out, I hate these little dashed lines. They keep coming back. But I'm going to get rid of it. There we go. And that day there, I'm pretty sure I ran it as a short or in my as a feature chart in my downtrends list, but I also ran it on that day and that day and that day and that day as well. And actually what we're seeing here is really something really wonderful in terms of a teaching tool for me, because what did we see? We saw the opposite of what we wanted to see in, or we don't want to see in Aristocrat. or was it Aristocrat? ARB, Aristocrat's going up as well. ARB, the previous one, we saw what we don't want to see in a short trade is those rising points of demand and rising points of supply, because that means that we have a building demand, point of demand being reinforced, or a demand reinforcement, and we've also got supply removal, and we want lots of supply when we're short. We want demand to be removed, not reinforced. It's the opposite of what we want. Interestingly, it happened with some black candles, but certainly you had the ability here to extricate yourself from your shorts, I think, and I think by the close above that one there with that candle, you're probably all out and maybe break even. What you didn't have was the ability to go long, because none of my three setups are evident here. So obviously it's not a continuation setup for a long. We don't have two greens. It's not a turnaround setup because we are not interacting and showing a higher peaks at the long-term trend ribbon. It hasn't happened yet, and it's not an aggressive setup. Aggressive setup because we don't have a base pattern. So if you got into this, look, congratulations to you, but you broke my rules. That's irrelevant. Hey, it's up to you what you do. I can't do anything with this now. I agree, Adrian, we've got some great candles. Adrian's question is it too late? I put to you, Adrian, I don't know if it's too late because I can't tell the future, but is it one of my three setups? That's the real question, isn't it? And that's the question you always need to ask yourself, certainly before you ask me. It's more of a turnaround setup, so it's not a continuation, it's not aggressive, it's the one in the middle, but it's not a turnaround setup yet because we don't have the dink. What is the dink? That is the technical term for a show of any supply in a strong uptrend that has not seen any test, supply side test at this stage. We want to see how the supply side responds, or more importantly, actually, that's not right. We want to see how the supply side responds. We want to see how the demand side responds to that supply. We've been in an environment previously where demand really has caved at the slightest showing of supply. I don't think that's going to be the case now, but we just want to see a pullback, test and hold of the long-term uptrend ribbon. That long-term trend ribbon, that long-term trend ribbon going from offering dynamic supply like here to starting to offering dynamic demand. We're not there yet, so I can't do anything about this, but I have to concede that the candles are amazing up to this point, and the recent price action is impeccable, and yet there's nothing I can do about it. There's because I have rules, and I always follow my rules, always, and always, unless it's my Bitcoin and my Ethereum, and then I tend to break my rules a little bit. But I shouldn't tell you that stuff. Now, the other problem that you have here, Adrian, in the question, is it too late? I don't know because I can't tell the future. But what I do know is it's getting pretty close to a clearly defined zone of historical supply. If there was supply there in the past, there could be supply there in the future. We won't know until we get there with the candles. We're very close. And that might be the catalyst actually for providing the dink, which then would give us another indication of whether to add risk to this one. I'm going to put this out to you, Adrian, and to everyone else, that even if we got the dink, is this going to be the best chart we can find? And I know you're obsessed with New Hope Corporation. I know you can tell me all about its fundamentals for some reason. I don't know why. But even if you do get the dink, is it the best chart you can buy? We're going to see a bunch of other charts today, which I think are going to look better than that. It's all about you. And your dollars. Forget those experts, there's professionals out there finding the best risk-adjusted return. What about you finding the best risk-adjusted return for your dollars? Let's go to Tony. Tony's got RZI, which actually is one of my setups here, official setups. It's the second one. It's the turnaround setup because it's had the dink, hasn't it? It has had the base pattern. Look at this. We do actually have a base pattern here. Let me zoom out of it. Now we're going to zoom normal. So you can see how it's changed phase here. And I reckon if I go back far enough, and I might have to go back a long way, we're probably going to see this on the way up and see when it does meet all my criteria. And it looks fantastic. And I'm adding risk here, through here and here. And you know my system well enough now to know what candles get my interest. Okay, and what candles start to get me out. And then, maybe it's looking interesting here. But we also increase the downside volatility. Look how little downside volatility we've got through here, and look at the downside volatility through here. It's not as good. This we know is changing trend. This we know is important. And then this is the death knell where we get beneath that long-term uptrend ribbon. It starts to converge, it turns orange, and then we fail at it, and holy dooly, What a textbook failure here. And ladies and gentlemen, I'm so proud that I can give you this model because how many times have you seen this on not just Raiz? Who gives a shit if it's Raiz or not? But just so many other stocks. And what have they got to do? What have they got in common? Nothing. They've got nothing in common. What has Raiz got in common with BHP when BHP did it, or NAB when NAB did it, or CSL when CSL did it? Nothing in common apart from the fact that all of their prices are driven by demand and supply. That is textbook stuff. And then look at the short-term trend ribbon, what it does, and then I guess we're going to get some touches here at some stage, which just is bloody perfect as usual. Oh, look interesting here. Started to look interesting here, then failed. And this time it's different, isn't it? And this is just how the model works. And you can new hope it if you like and go outside the model. Hey, you can do whatever you bloody well please. But I suggest if the model works so well, why not just let the model work for you? This is a turnaround setup here because we are now going from a phase of this long-term trend ribbon offering dynamic supply to offering dynamic demand. We've got a nice test and hold here. We've got high peaks and high troughs and some decent candles. The only problem here is it's illiquid. It's a bit sketchy. And that doesn't mean they're bad stocks. It just means they're volatile stocks, sketchy. The leopard doesn't change its spots. It could be sketchy in the future. Go into these eyes wide open and maybe, just put less risk on them for that reason. I don't mind this one. I could certainly have a risk on this one. I think if you have got it, then full risk position. Nothing wrong with today's candle. If you don't have it, I can't see why you couldn't add a third. Is this going to be the best setup we're going to see today? Hey, let's get to the end of the day and then we'll know. Let's go to Tony's next one, which is ACE, which is also... Oh, is it a turnaround? I think it's more of a turnaround. It's halfway between turnaround and continuation, isn't it? Because we have a really nice, really well-established short-term uptrend. We can see the long-term trend ribbon is on its way to turning around. It's amber at the moment, but you can see the convergence there is pretty. It's probably a week or two away from getting back to green. I think it's probably more 2 or 3 weeks away, but it's not that far away. And candles are pretty good. There's a few sketchy ones here. Price action is good in terms that we've got good price action. So the last trough is tending to come in at or above the second from last peak. What does that mean? This is good price action. There's your point of demand there. We'll stop calling them peaks and troughs. There's your point of supply. There's your second last point of supply. And it's important that we see that the last point of demand, that one there, is coming in at or above the second from last point of supply. I won't tell you why. I might tell you somewhere down the track. We've spent a bit of time doing 101, haven't we? Once again, I can see a lot of good stuff here. Is this the one I would buy with my money? It's Sketchorama. But if you like it for whatever reason, I can't imagine why, because that would imply you knew what it did. Why would you want to know what the stock does? Why would you go down that slippery slope? In my experience, ladies and gentlemen, the more you know about the stock, the worse you tend to trade it. What's the answer to that? They don't know anything about it. Oh, that doesn't look good. I better get the hell out. Oh, that doesn't look good. Oh, but what about the fundamentals? It's your choice. Okay, that's the offline requests for Australia. Let's make sure everybody's still here and still listening and haven't tuned out. Hey, Carl. Hey, Ben. Can you give us your input with the recent lithium pump? Also, if you could do a few of my lithiums. Yeah, I can do a lithium review. I did a lithium review, Ben, on Market Index. I'll show you that in a second. I'll make sure I don't have any emergency messages in here. I don't think I do. They're all pretty stock standard. Okay. Actually, I will answer Blair's question first before I go to lithium. And Blair's question is, let's consider, quoting Blair here, let's consider a stock that's made your shortlist and all the criteria are met, including last white candle. However, when looking to start or add to the position, we find that the intraday price has dipped even slightly. How should we proceed? Amazing question. Wonderful question. If you didn't get it, let me sort of say it again, summarise. Looks great. We want to get in. We tune in the next day. We load up our broking platform and we can see that we've got one of those black candles. What do we do? Do we still get in? I mean, yesterday's candle was amazing. What do we do? And it's a very sensible, very practical question. A couple of ways you can look at this. don't look at the market when it's open the next day. So if you've got the ability to set on stop orders, you can set the price up in advance to get in, say, a pip or 2 pips, whatever you want, a couple of pips above the previous bar's high, and then it will be automated. You won't. If it starts with a black candle, you won't get in because you would require some sort of white candle at least to trigger that on stop order. So that's one way to do it. Another way to do it would be to do your analysis before the close, the previous day, and just get in before the close, and then you're not subject to that uncertainty of the next morning. So ideally, you're not there, that next morning to have to worry about it. If you are there, then I suggest, look, typically if it's above the balance point of the previous candle, I've told you the balance point is sort of the halfway point of the candle, because it's just like getting elected here in Australia. What do you need? 50.1% of the vote, right? And that's all we're saying. A candle is the demand and supply voting. So as long as you're above the balance point, I'm not going to stress out too much about these things. Execute your trades and then turn your bloody screen off and stop watching, because nothing good will come of you watching your trades during the day. I don't know if I need to explain that in 34 different languages, like this is SBS. But nothing good will come of you watching your trades during the day. Please don't do that. When you watch your trades, you get all excited, and then you get all despondent, and then you get excited and despondent, i.e. you get emotional. And we make really bad decisions when we're emotional. I like to do my analysis either just before the market's closed, get those trades in and then walk away, or after the market is closed, because then you can't do anything about it. You can have the worst result in your trade and you can't do anything stupid about that until you've slept on it the next day, and you come back in the morning and go, okay, well, maybe I better not do that stupid thing that I was going to do. I think I've answered that question. If I haven't, Blair, then email me again and ask for clarification. Okay, let's go to Ben. Ben wanted some information on lithium stocks. I do have, if I don't cover them all here, Ben, Market Index. This is the site that pays me to write wonderful news articles during the day, my day job, as it were. And I did write this one here. Is the low in lithium finally in? It's not such a horrible job, is it? Just to write about stuff I like to do during the day. Just look at charts and write about them. That's nice. Is the low that amazingly I did when I've started with these guys. I was at Think Markets before this, where I was doing these webinars, and that's how most of you found me in the first place. I did say, hey, look, do you want me to keep doing these webinars? And they said, no, Carl, no thanks. Whatevs. Anyway, it's frustrating. I have to write stuff because I'd much rather just talk about it like this with you guys and girls. But there it is there. So that's the lithium review in about 1 million words for you, Ben. You can refer to that along with what I'm about to say here, which is going here and going here. And some of your lithiums, you say, I was hoping you'd have some good ones, but you don't. You've got LKE. I've run out of Zoom, mate. That's all the Zoom I have. Okay, so when, this is kind of a little bit dead in the water, is my suggestion to you. It's a little bit forgotten by the universe. Not to say it can't go up ever again, but let's determine when that might happen. And to do that, let's go to the past. And this is the last time that it was lost to the world, to the universe. And what happened last time? Well, these are the things you want to look for. Look, a bunch of white candles came in. Actually, a bit of volume here. It's a little bit skewed because of this volume over here, right? But even with that volume over here, you can see actually something's going on. And volume, it's like the volume on stereo. Turn it up. Everybody can hear it. They can douche, 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 douche. They can hear that from across the road. They stick their head in. Hey, Carl, you're having a party? I say, yeah, there's a party over here. Can I join it? Of course you can. If that volume is turned all the way down, you can't hear it. So volume's a good start. White candles a good start. We're going to see probably some volatility, upside volatility, some interest. Oh, that can't go up anymore. That's gone up too much. It was 3 cents. It's 6 cents. Doubled. My little brain can't comprehend with something doubling, because if I was at Woolies and something all of a sudden doubled, I wouldn't buy it. It's too expensive. I'd wait till it came down again. Well, that just puts paid to that whole idea, that next candle. That's it, can't go up anymore, that's the end of it. Well, it actually might be. This is a bunch of black candles there. But look, let's just see. Progressive short-term trends are up. Let's see peaks and troughs. Are they turning up? Yes, they're turning up. We've got some interest, like something good can happen here. I don't think we won. What's the point of this going into it? Anyway, we eventually got there. My point is, okay, copy and paste. None of that's happening yet. Let's keep moving on. When it does, I'll get just as excited about Lake Resources and its prospects as you are right now. There's a little bit going on here, and I think that's what I said in my write-up. We've got an intermediate low is in. I know that because I've got rising peaks and troughs on this side. I've got decent candles. Price action is not terrible. Trends, short-term trend at least is neutralised. But we've still got this big elephant in the room, which is that long-term downtrend ribbon. And look, is this? This is not my. This is not the one I would be drawn to for an aggressive trade just at this stage, because the base pattern's not substantial enough. We have had, I think, actually some really interesting volume blow-offs here, which could suggest that the last of those last weak hands have gotten out. Not terrible here. Look, I could certainly get to a hold. So if you've been suffering with Liontown Resources for a very long time, and most of that time you were going, oh shit, I hope this doesn't go any lower. Look, I probably won't go any lower for the foreseeable future. However, black candles, low peaks and low troughs, particularly around that long-term uptrend ribbon, would be problematic. I'm a happy holder for here. If you had it, I couldn't. I own this because it doesn't meet any of my 3 setups. But for you, not the worst thing I've seen. And next bit, not your favourite, Sayona and CXO. A little bit, I was going to say dead in the water. Actually, that's not true. We've got some interest in it. We've actually got some volume. Sayona here looks like Lake Resources did before it got going last time. So there's some good stuff going on. Again, not quite my cup of tea yet, but not impossible for that to occur. I'm about to say this out loud. I could contemplate buying some Sayona, possibly on something that looked like this, but it would have to be a really, really nice candle, a full white candle, emphatic close, maybe even on some nice volume as well, telling me we're removing supply. We've also got this over here, which is problematic. But I could see it happening. Why? Because I've been doing my watch list for a long time, and you can go back and check on Twitter where Sayona was. People think I hate lithium. I don't hate lithium. I was putting them in as longs all the way. Well, not all of them, but some of them through here, and probably through here as well, because that's the last when they met my criteria. And again, a great thing to do if you're holding onto this crap. Let's face it, that's what it is. Go back and see the last time how it got going. That's what you're going to need this time as well. Why? Because this is just demand and supply. And demand and supply always does the same stuff. Always. Oh, that looks good. I could add to this. Well, there you go. Well, I was not expecting this to occur today. Now, you know my history with this stock. Many of you have probably come to listen to me because you heard me calling this stock a piece of crap in the past several times. I think we had some risk here. I think if you got an FRP, I think we go plus 1/3. Actually, can't go plus 1/3. I've made a mistake there. I've gotten a little bit excited. It's more like a plus 1/6. It's dipping a toe in the water, and it's nothing more than that. And it's just about saying, do the supply and demand dynamics warrant having some risk? And I think it does. And then if this continues to do well, does sort of this sort of price action, it continues to make high peaks and high troughs, it interacts with this zone, it starts to make it dynamic demand. You know what? We're going to be increasing our risk into the trade, much like we would have done it the last time. I mean, look how good it was here. I was on AusBiz with my good friend Henry Jennings. How many times were Henry and I on AusBiz? I don't know if you remember, where we both literally said a buy on core lithium. Him because he liked the fundamentals, me because I liked the chart. Okay, I'm going to put to you the difference is actually that's not fair. Actually, He does like to feed the masses on the way up, doesn't he, Henry? So I do remember him saying to get out a few times, so that's not fair to say that he would have held on the whole way, but certainly my model got me out. Well, there you go. I wasn't expecting that to happen today, Ben. You've surprised me. Jackie, let's go. Yep. Jackie say, yep, I forgot to use the link, but I got the spring special. Well, that doesn't help me at all, does it, Jackie? Thanks for nothing. Let's go to Francine. Francine saying, thoughts on mineral resources. I've kind of, indicated my thoughts on these. Again, I had nothing but shortlist setups here. Go check the website here, and here. But then by here, I reckon you're all out, to be honest. I can't go along this. It doesn't meet any of my 3 trading setups. If I'm anything, Francine, I hope you agree, I am consistent, and there's no setup here for me. What would turn it into a setup? Well, it's not an aggressive trade because it's a V-shaped. I don't have a V-shaped aggressive entry. I don't do those. I'm sorry. I don't. They're hard to pick. They don't occur very often, and that's why I don't have them. I prefer the base pattern for me to get in the long-term downtrend, and there's a reason for that. I know what works consistently. Oh, this one worked. Okay, go try and find 100 like that. Find 100 long base patterns, and you'll see which ones work better. It's not a turnaround setup yet because we haven't had any interaction with this, and it's certainly not a continuation setup. So what do I think about this? I don't. It's as simple as that. I don't think about mineral resources. What do you think about BHP, Carl? I don't. Sorry, I don't think about it. What do you think about, what's the other one? Wire. Wire actually looks half decent because it is meeting. Let me just go back to BHP for a second. Good old BHP. I did a tweet today and I said, that the move today is close to 20%. It's only happened, I think was it 6 or 8 times in the last 25 years, quarter of a century. And 3 of those times were associated with coming out of the GFC. So you can expect things were dynamic and changing and substantial things were happening in the world. One of them was after COVID, which again was just a huge tectonic shift in global markets. And that left a few others that were in the lead up to the top, but it just doesn't happen. What you've seen just doesn't happen very often. I need a dink here, and then I could look at it. It's closer to a turnaround setup than it is to anything else. So yes, BHP is in play if those right things occur. Let's go to Wire. This one looks better because it has got above its long-term uptrend ribbon. The long-term uptrend ribbon is green. The short-term uptrend is green. I've put in a bunch of copper stocks. Really, I've put in CSC. I think MAC's gone in tonight. And a few of them. Obviously, you would have read about my views on copper in those regular updates. This is probably the entry here. I can't remember if I ran it on this day. I probably didn't, just on the basis that I reckon there were better setups out there. And many of those have gone up just as much as this one. Maybe some of them didn't, but I just felt that we could do better than this. It's all good. It's fine. Just waiting for a dink. I think anything here next. Well, that's not even necessary. Next white candle. Next high close. Next NHC. That's what it stands for. Next high close. And I could happily add a third. In the meantime, I'm FRP. So let's put plus 1/3 there over the NHC. Let's go to JH Oz. I don't know who JH Oz is. You're new. Welcome if you are new, or you've changed your username, possibly. Let's go to OBM. There you go. Okay, so this is not ideal, these last 2 candles. I don't think they're enough just yet to push me out of any of the risk here. Obviously, you can see last time we're FRP, but we have some issues. These are the 2 most substantial, maybe that one could probably qualify, supply side candles we've had in a while, in quite a long time. Blend them together, they would together constitute the most substantial supply side candle we've had in a while. So we need to take notice. We can't ignore it. And all we're looking for now is confirmation. We've got a bit of supply in the market. Before we didn't have it. Okay, everything was hooly-dooly. Now there's supply. We're looking for confirmation. Confirmation that supply would come in any sort of rally from here. And there's no reason why it can't rally because it's been such a great trend. But the lower point of demand, point of supply coming in, taking out of the point of demand in the middle would not be good. And this is just textbook. This is just the basic rules of my model. If we don't see those, we need a contingency plan. We've also got a old point of supply here, point of demand. We don't want to see get beneath that. That wouldn't be ideal with a low close. Certainly not here. That's a no-go zone and it's also beneath the short-term uptrend ribbon. So certainly beneath here, 100% managing a risk. I'm going to say it's probably more than 1/3 because we've taken out a couple of levels here. So I'm going to go 2/3 at that level, and then the most I could have is 1/3, just on the basis that that long-term trend is still very strong. But until then, we have to give it a chance. FRP. Let's go to SBM. No problems on this one. Had another white candle today. It's very strong. And gold stocks had a terrible day today, so that's actually really good. It's a vertical line up. You might get a dink, and I think the dink probably won't go any further down than this rectangle I'm going to draw here, because that old point of supply, or that old zone of supply, should in theory act as in the future as a zone of demand, and for that reason we will change its color to light green, because that's demand. There you go. Demand's always green and supply's always red. Didn't you know that? It's fine. FRP. Not going to add risk on today's candle. I don't think it warrants it. We've got a bit of supply here, so we're just being a little bit cautious. But FRP is no question on that one. Let's go there. Let's go now to Perry. Perry's got Tuas, which are still looking very good. That's in my shortlist tonight. Perry, it's impeccable. It cannot be faulted. You can see actually at some stage we took all the risk out of this one, and I think I put it in for the first time again here as a feature chart, here as a feature chart, here as a feature chart, and fourth candle in a row. 4 out of 5 candles as another feature there. So happy holder. FRP plus 1/3 for you on that one. Perry plus 1/3. And let's go to Adonis. Has got CU6. Still fine. Adonis. There's really very little downside volatility on this. I know today's candle wasn't ideal. Not ideal in a pretty good market also, but pretty happy to stick with that one. FRP and not plus 1/3, obviously, because we don't have the candle for it. Where would we think about managing a risk? Look, a big black candle, because there's a little trough in here, just be careful with that trough. It would take a really nasty candle, low close, for me to manage my risk on this next. Look like something like that. And then the next level is under here. And something like that might be a third, something like that might be the final 2/3 on it, but still hanging in there for me in the meantime. SPZ is the next one, which that's annoying, isn't it? Yeah, not a great candle today, but it's so illiquid. How many shares did we trade today? 360,000, not a lot. So I think you just give it a little bit of a wide berth here. It's fine. Look, I'd be more concerned if it closed underneath there, Adonis, but until then I think you're okay. So I'm happy to go FRP on that one, even though it's not the prettiest of candles there. But when you trade these illiquid ones, then, you can get that. It's got a Robert. Robert's got IPX, and that still looks good. No problems at all with this one, Robert. I'm going to go FRP. If there's something sinister, I'll tell you. I won't go through the motions of saying, well, look out for lower peaks, lower troughs and black candles, because I think we get the picture on that. OPT, not an ideal candle today, but certainly not enough to push me off a full risk position. If we zoom that out, see sort of where we are on the weekly chart. Well, we're in the long-term downtrend ribbon on the weekly chart, so that might cause some issues. Is there anything sort of really sinister out here that might be explaining why we're starting to pause a little bit? Point of supply there, that's about it. So not too fussed about it. Wouldn't stress out about that at all. And HUM, ditto. I mean, we've got a bunch of stocks we've just looked at, which are all in great trends. They've all done really well. You're probably making some money on them. I don't think you need to panic just yet if that's how you're feeling. Oh, Carl, it's hard enough to make money. I don't want to give back any profits. You can do whatever you want, but I have to follow my system, and I can't see anything in those yet that are telling me to do anything but FRP. Let's go to IPL, another one, which is having good trend in a couple of half awful candles. Some are half decent, half awful candles. Still in trend, FRP, and look at closing beneath previous points of demand, black candles, that sort of thing. Let's go to MMI. I saw this one today, Robert. I didn't shortlist it in the end. I can see what you're looking at there. It's definitely a turnaround setup. We've come back to long-term trend ribbon. We've actually held it reasonably well. Some nice white candles through there. Actually, a little bit of a push up in volume. A strong candle today. Average volume, no problems. So happy holder. I just think there's a lot of work to do to get back to here. There's a lot of black candles indicates there was a lot of supply here. It might be that way going forward. So look, FRP, if you know the story and you like it, I could go 1/3, but I don't know the story. So I've no affinity or love affair with it. I just don't think this is the best setup I'm going to see today. Let's go to, that was different, Robert. IMB, well done. Who's this one? This is from Hoozle. Hoozle, of course, knows my model inside out, and that is in my shortlist and feature charts today. It's impeccable, can't be faulted. It is the perfect 10 out of 10 trade. I have no idea where it's going next. Just because it's 10 out of 10 doesn't mean it's guaranteed to go up, but it is guaranteed to get some risk from me. That's what it is guaranteed to do. I don't know where it's going, but definitely will get some risk from me. Impeccable. Botanix had a good day today. I didn't put it in my shortlist because my thoughts on, well, if this much damage is done, I want to see quite a bit of, I know being a bit vague, but I want to see quite a bit of work done back up the other side to tell me I'm getting rid of it. Today's candle is exemplary, I must admit. I was very close to shortlisting this, but the fact that it's kind of just, it got beneath that trend ribbon. It got beneath this point of demand here. There's a few things it did that I wasn't happy with. So I need it to prove its pedigree again. Yes, it's had a good pedigree in the past. Yesterday's candle is great, but I want it to impress me some more. What would help this one impress me more? A little dink, a little trough. Let's see. The supply side was strong here. The demand side crumbled. Let's see if we get a supply side push and the demand side comes back in strong. Then we know the supply side is weakened. We know the demand side is strengthened, and that would do it for me. So look, definitely FRP though. Don't get me wrong. But I just needed a bit more on that one before I added any further risk to it. Let's go to, what's the time? We're getting pretty close, so stop adding new ones in, by the way, because I won't do them. That's typically how we go. We get to about 8 o'clock, and then we try to find some semblance of the home straight. AIM got shortlisted, but didn't get featured. I felt this had done enough, and it's just, I think, because we're kind of 2/3 of the way up, aren't we, from that trough. Notice how this didn't fall beneath the long-term trend ribbon. So just trying to pull out some things that you can actually peg, not being vague, but absolutely specific. Held the trend ribbon really well. Yes, we moved into lower peaks and lower troughs, but this point of demand was held really well at that trough. So I think there's more than enough here to push this to a plus 1/3, whereas Botanix I required a bit more from it. So FRP plus 1/3 on that one. Let's go to, and sometimes there are just these very subtle features between an FRP and an FRP plus 1/3. This one didn't get shortlisted today, and it didn't get featured for obvious reasons. That upper shadow and proximity to $5, but that doesn't mean there's any reason to get out a single share. Okay, I think it can still get closer to $5. I'd have orders to sell at least 1/3 in the high 480s, like a 485, 490. I think would be a good place to offload a little bit and just see how we go. But otherwise, there isn't a reason to sell a single share of that. It's done really well, and it's been featured many times in my watch list. I'm glad to see you're on it. CNB, this one is for Michael. Aggressive setup, good. I'm glad he at least put it out there as to which one of the 3 setups it would be. Because normally I'd look at that chart and go, there's not a lot I can do with this one. Is it an aggressive setup? Is there a big base pattern? Is there a predominance of white candles? Are we seeing higher peaks and higher troughs? Are we seeing the short-term trend ribbon up? I like to see an uptrend on those base patterns, those aggressive setups. Is the short-term trend ribbon offering dynamic support? None of those things are present. Are we seeing some great price action, like really bullish price action on high volume? Not seeing any of those. So I'm going to put to you, Michael, that is not an aggressive setup, and therefore it does not deserve any further attention from me. FND. Hey, it could be the best stock over the next 12 months in the ASX, and I don't know, but I do know when it puts in the right or the right things that I'd like to see, I'll be all over it. Findi is fine. We would have been FRP. We were worried about $5 last time. This is not the first rodeo at $5. Not great candles last couple, but nowhere near enough to push us out of any risk on this one just yet. So yeah, FRP on that one. And I can add to this next high close, adding another third. Until then, I'm not too concerned about it. What is your platform of choice to trade indices and commodities and CFDs? Yeah, not going to get drawn into that, but any of the majors, Herzl, go with somebody that you can call and speak to over the phone. Go with somebody whose phone number is on their website. Try not to go with companies where you can't find the phone number and you can't speak to somebody in real life because they're just a pain in the ass. Cheap brokerage is always good. If you can find the combination of the two, you've got something that's magic. In a past life, I might have said think markets, but I don't say that anymore. Let's go to Robert's got another one, CHN. Yeah, we did talk about this one, didn't we? No, it was CXL. How's that going? How's that one going? Somebody asked me about CXL. We agreed it was an aggressive setup. We went FRP plus 1/6. This is why we only do a 6 on these things. Let me just move that out of the way. Look, it hasn't done awful. I think you're still sitting on that position. This hasn't been enough to push us out of it, but it does demonstrate how frustrating these ones can turn out to be. This one is actually starting to look okay. I can see one adding risk to this. The candles haven't been perfect. You can see there are still upper shadows. Its supply is still pesky. It's trying to turn the long-term trend around, but we have seen a trough around that zone. It certainly ticks all the boxes in terms of a long basing pattern, high peaks and high troughs. So this is somewhere between aggressive now and turnaround. If it's something you are particularly passionate about, I can certainly see a path to owning some. FRP if you've got it, no questions asked, and plus 1/6 if you're thinking about it, although it's not my ideal setup here for an aggressive trade. I'd love to see a nice high close on a candle before I get in ideally, and we're not seeing the perfect candle yet, but I suspect it's not far away. So I don't mind that one. So we can see the difference here between this one and CNB, okay? And it should be clear as day, the difference between those two. Let's go to Anton has got Droneshield, made the list today, didn't make the, I want to get rid of all of these, there's just too much stuff on there. It was ZRP last time, but I did think that it warrants some skin in the game, and maybe it's a 6th at this stage. Certainly FRP if you've got it, maybe it's a 6th until we get that really nice candle. I just get the feeling it's okay. It's okay. If you've got Droneshield, that's probably enough information for you. It's okay. Downer is not okay. It could be a lot better. It's not terrible, don't get me wrong. But we are seeing lower peaks and lower troughs. We're seeing a predominance of black candles. That's a little bit disturbing. I think this one's actually really easy. I think it's fine until it closes beneath here. And I reckon for me, close below. And I think I'm ZRP on this one. If that occurs, we've got enough in there to not be holding a full risk position already. And I think you're all out by that point. PNV. PNV is problematic. Look at the drawings we've got here. I'm going to start with a clean slate on this one again so I can see what's going on. It's very sideways, isn't it? I think it's okay. It's not shooting the lights out. It's going to frustrate the hell out of you. I think it's okay. Did I mention I think it's okay? I don't think it's okay beneath there. I'd be concerned about it, and I think we need to be all out by there. But until then, it's an FRP, but it's not my favourite looking thing at this stage. Not the worst, but certainly not my favourite. Anton's asked me for about 10 of them. APX is still okay. I don't like this black candle here. I know I've done FRP there, but I'm compelled to do it. I'm not sure why I did plus 1/3. I guess maybe, yeah, it's a strong close. It was above $2. Yeah, I can see why I did that. We're obviously talking about this candle here and that point of supply, which otherwise might have put me off. But no, a bit of an upper shadow for the point of supply. But no, I think otherwise certainly warranted it. This is concerning. I'm worried about this candle. I don't think we need to do anything about it until we close beneath that candle. And then I'm going to put to you that a close beneath that. I think you're doing at least 2/3, but I'm actually going to go ZRP on that one. It's an extremely volatile proposition, AXP, and when you get that volatility, you might want to just dial down your risk a little bit. I'll do the US ones in a second. Perry's got PME, which is on my list today, Perry, and it's also a feature chart as well. There's just nothing to do here but copy and paste that FRP plus 1/3 and stick it there. The perfect chart setup, the picture, the epitome of excess demand over the short and long term. Robert's back again with A3D. I might have to start asking people, just do 2 or 3 and not 2 more than that, please. Look, this actually looks pretty good. It reminds me of that MMI we looked at. I think this one's better than MMI, if that's worth anything to you, because the last few candles are very clean. It's a low volume. Well, I want to say low volume. It's trading millions, isn't it, to be fair? But I haven't seen a big volume influx here on this push. Happy holder. I don't think it's enough to get me in at this stage. A dink would have me interested. Another high close after that dink would have me interested. Certainly FRP, no questions about that. Is this the best setup we can find for turnaround setups? It's not bad. It's not bad at all. Look, I don't mind it. I can see myself, if it does just a few more things, putting this in the watch list soon. Let's go to NAB, which we've got problems here. So I don't think you can hold a full risk position anymore on NAB. I think this candle and this candle did it for me. So I think we're at most at this stage, plus 2/3 risk position. And then just waiting to see what happens from here. So we've taken 1/3 off the table. What would start to make us take some more off the table? So I think that's where we're heading with it. If we failed to get above that short-term trend ribbon again, we threw in an upper shadow there, and that's all it would take. Any confirmation. Here's your supply. Now we're just looking for any confirmation to continue to push us out of this trade. Okay, so we've got a toe out the door and any confirmation to continue to push us out the door, because we're trying to find the best momentum at any point in time. We're not here to collect dividends and franking credits. If you want that, you need to find somebody else. Hey, I'm not saying that's wrong or there's anything bad with that. I'm just saying I'm not your guy. DEG, I think, looks really good, actually. That made the shortlist today. Didn't make the feature. And the reason why I didn't make the feature is there's still plenty of stuff out here that it needs to deal with. So I think there are easier runs. But if you've got it, certainly an FRP on that one. You might have been suffering on this one for a while, and at least I think you can rest assured that it's turned the corner in a meaningful way at this stage. And Yancoal, I think, also fits into that category. Did make the list today. It needs a dink, so I'd be looking. And a part of this is a dividend, probably, but anything that kind of looks like that would start to have me looking at it again. But it's not there for me just yet. From Roscoe, Carl, do you have an opinion or reasoning when both trend ribbons are green, with the short-term ribbon steep with a high closed candle is too far away from the short-term ribbon? Is there a percentage gap that you might consider taking some off the table, except for round number? No, there isn't. So what Roscoe's saying is, this is a great example, Roscoe. I bet you this is exactly what you're talking about. So if I go to here, like, how do you get a certain distance from the light green ribbon and say, well, therefore we should be taking some off the table because of the likelihood, and I'm using that word deliberately, of mean reversion. There's no likelihood of mean reversion. There's no reason anything should revert to the mean. It will revert to the mean when the candles change. So when the candles do this sort of stuff, you're more likely to revert to the mean. When they're doing this sort of stuff, they're still okay, I think. Now, what does history show? History shows, of course, revert to the mean. Okay, not proving my case, am I? But to be fair, that's when it started to give you signs that it wanted to do that. But I get what Roscoe's saying. Roscoe's saying, well, can I get out before that occurs? And I'm saying, Roscoe, how do you know that's going to occur if it hasn't happened yet? Okay, and all you've got is white candles. But that's my model. If you look, you can use an average true range. A lot of people will do that. They say if it's moved a certain number of average true ranges away from the ribbon, and these are all mathematical terms you can measure. There are indicators that tell you what the average true range is. You can say, well, if it moves 5 ATRs away, I'm going to take a third off the table, and try it. Give it a shot. See how it works for you. If it causes you to miss out too many profits, then you know it's not a good rule to add to your model, Roscoe. What's your model? What's Roscoe's trading model? Forget Carl's model. That's Carl's model. What's your model? You might try 3 ATRs. See if that works. But if it works, keep doing it. That is always my model. If it works, keep doing it. If it doesn't work, stop doing it. US stocks. Now, that's it. US stocks from here. Let's go over to the trading view screen. And I'm going to move back up the watch list here with Matthew asking about the BEKE. And let's go all, and we're going to go KE Holdings. I think that's the one we're talking about here on the NYSE. I wonder if this has got something to do with China. I mean, I'm looking at that chart, and I know the only charts I've seen do that over the last few days have something to do with China. So I'm not saying you need to know the fundamentals, but if you've got 10 trades right now that are all something to do with this China turnaround, that's when I think you need to consider it. I need to go to the weekly chart. The other one that looked like this, and you've probably seen it already, Matt, is Barber, which I was asked about on Twitter today. And I think that's really interesting, this trade here. And I think you're starting to add some risk to these. And the next dink is the way to go. So any sort of pullback, shallow pullback, good candles start popping in. I think we're starting to add to these because you look at that weekly chart, and I think this thing's got some legs given that price action signal volume. It's trying to break that short-term trend ribbon as well. I know I'm off topic. I'm on your BEKE, but I'm kind of not off topic either, if you get my drift, because it's the same chart. So going back to your daily chart, I would say ditto. Next, pullback, strong candles, high close, then I think all of these are in play, but don't necessarily go for BEKE until you've kind of seen a few of the other ones and try and find the best few. Let's go to Jackie's got to go. No worries, Jackie. See you later. It's in real estate, Chinese real estate. I'm guessing, Matt, probably. Let's go to BVS, which is the Aussie one, or Bioventus. I'm guessing it's Bioventus because we're looking at US stuff. Looks great. No problems at all. Last candle is not ideal, and the combination I think of Thursday, Friday is also not ideal. I'm okay as a holder here. I think we're still FRP, but we're getting a little bit concerned about further confirmation here of the supply side coming in, because the supply side is coming in, it's pretty clear. But overall the trends are impeccable, and therefore I'd still be an FRP on this one. Let's go to FUTU. I'm not familiar with this one, but sounds great and looks great. I'm going to go ditto on a few others. This is the best one that you've shown me, and I think actually this looks better than Barber, even just from the daily chart. It actually looks better than Barber, I think, on the weekly chart as well. I think this looks very interesting. I'm happy to own some of this, and it's really is about putting a toe in the water, getting some skin in the game, and then just developing that position as the price action warrants it. I'm going to go plus 1/3, I think, on this one. I think it's more than a plus 1/6. I know, Roscoe, this gets back to what you were saying before about, well, how far should it be from the green zone before we get out automatically? And this kind of counters your proposition by saying this is miles away from the green zone. I'm adding risk because the candles, the price action, and the weekly trend and the volume, it all warrants it, I feel. So not sure, how that gels with you. Let's go. Thank you, Matthew, for those. Let's go to Sonia. I didn't do your ACL, but I think I might have done it earlier on. Okay, I better go back. I don't want to leave anybody behind. I'll do it very quickly. I've got a feeling I did this. It looks fine. No complaints, no questions. It made the shortlist today. Didn't make the feature. Certainly an FRP or plus 1/3 if you want to. No problems with that at all. So that was an easy one. Going to go back to the US ones now, and I've got Perry with his 3. Thanks, Perry. BWXT. Let's try typing it into TradingView, Carl, and it might work. BWXT. Great. It's more of a coiled spring than some of the other ones we've seen. I'm going to go to the weekly chart here, and I knew I wasn't going to find any issues there. It looks immaculate. It's just such a great setup. And again, that doesn't mean it's guaranteed to go up. It just means that there's so much demand here compared to the amount of supply that's around. And we're assuming that the people who are doing that know what they're doing. Okay. But I'm very happy with that one. Let's go to GEN. Maybe not that one. Let's try again GN, but we'll try stocks this time. Whatever that was good. What the hell was? Let's just go back a second. What the hell was that? Generali Standard Futures. What the hell is this? Standard Futures of Generali. What is Generali? What's going on? That looks amazing. I don't know what that is, but I think I want to buy it. What is it? Okay, let's go back here to the one that Perry's actually asking about. We'll go stocks. Oh, now I've lost it. Let's go. That one, which looks very good. I'm assuming that's the one you wanted, Perry. I don't know. Not as good as some of the other ones. More of a turnaround play. A little bit of an issue here. Yes, I'm happy with it. If this is the best one that you think you've got. Look, price action's a bit overlapping. Candles maybe less certain, but no issues with that. Maybe Perry was asking about the other one. Let's go to, lost my place, QFIN. Oh, I like this one. Definitely more of a turnaround play. Great basing through here. Great candles, excellent price action. I love the way it pushed through this. There's your dink, ladies and gentlemen. That's the dink I keep talking about. That's what I want to see. And then it's really just next high close from there. Maybe didn't have it there and there, which is unfortunate, but certainly got it on Friday. So this is an FRP plus 130, no doubt about it for me. On that one, let's escape that, hit save. Thank you, Perry, for those. Going up to, it's obviously a bunch of Aussie ones here, trying to find the next US one as I scroll up the list. And I might not find another one, so that might take us to the end. And that is all of those. And I didn't have any offline requests. So I think we're done. I'll give you another 30 seconds to tell me if I missed anything. Otherwise, while you're doing that, I'll get the formalities out of the way by saying that everything we've discussed this evening is general in nature. So not taking into account your personal financial circumstances or particular needs. So before acting upon any of this general information, consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Other than that, don't forget, trading is risky. Stuff goes up, stuff goes down. We saw that today. Candles don't always go the way you want them to. So, consider these. Consider your risk carefully. You're responsible for the stuff you do, not me. Apart from that, it's been an absolute pleasure chatting with you today. All the best if you're trading and investing until we catch up again. Bye-bye for now.